Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and with me, as always, is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Thank you.
You've reached quite a milestone this week, but we'll get to that in just a bit. Let's start off with, as we almost always do, a look at the top 40 and see where we are at the moment.
Yeah, well, I do like to have a look at this a lot recently, and I know this is a chart that the viewers have seen many, many times, but I still think it's relevant, and in fact this week even more so. So I've got the chart of the top 40 up on the screen at the moment, and it shows the last 2 years worth of trading action. And I have, on many, many occasions, I've drawn in this channel on the top 40 to illustrate the boundaries. And you can see that the market has bounced up and down off the lower boundary and off the upper boundary of this channel many times in the last 2 years. What's interesting is that we've now actually reversed down from the top of that channel in the last week. That was at around about 41,500. We had a reversal candle off the top of that channel, and we've started to come down now. The market is still very, very overbought, so we still do appear to be in consolidation mode at the moment. But it does seem as if at this point in time the market would be a little bit sticky here. But what's also very interesting is this chart. Now I want to go back and have a look. This is now the top 40 going back over the last 6 years or so. Okay. And what you can see here, this is 2007, the end of 2007, and then we've got the 2008 here, where we had the financial crisis and the market crash. And what's very, very interesting there is that if you now take your Fibonacci projections and look at where the market has reached, you'll notice that 161.8% projection of that entire market crash comes in at exactly the high point that we met at the top of that channel in the last week or so. So it all ties in very, very neatly, and it's very interesting to notice that it all seems to be coming together at this level now. And this certainly is an area where you would expect the market to become a little bit sticky now.
Garth, for those, I mean, it sounds a little bit arcane talking about Fibonacci projections, but I know that Fibonacci numbers are quite important for technical analysis. So could you maybe explain that in a little bit more detail, why this is such a key number to use?
Well, I mean, look, without going into the detail of it, because there's a lot that you can read up on Fibonacci numbers, but effectively you will notice that there are certain retracements and projections that are very regularly repeated in market cycles. The main ones that you can see illustrated on this chart here, if we take that move down, that entire financial market crisis and that crash, we consider that move to be 100%. What we now do is we look at the retracement levels. So you can see there's a line with a 23.6% retracement, there's 38% retracement, there's a 50% retracement, there's a 61.8% retracement of that entire crash. So in other words, that's the extent that the market has bounced up from the low of the crash relative to the size of the crash.
Yes.
Now what it's saying is that, and those are sort of the most common Fibonacci retracement numbers that we look at. But then when you start talking projections, then you start using multiples of these numbers outwards. And 161.8% is a very common one when it comes to projecting a move. So we take the distance of that entire crash and we then project that same distance up by 161.8%, and that gives us exactly the 41,500 level that we got to last week, where the market actually failed and turned lower.
You know, it's interesting. I was just having a chat with the CEO of Coronation, about their projections, and they are forecasting one not to expect nearly as good as they've had. And then also I mentioned an article written by Henry Blodgett, not to be an alarmist or anything like that, but saying that research and levels and indicators to him are pretty much as they were in 2007. And it was almost exactly what you're saying here. So, and he's looking for, he says, a 40 to 50% crash is entirely possible if all the air gets let out of the quantitative easing balloon. Yeah. But whether that's going to happen is anyone's guess.
Yeah, look, I mean, that is rather alarmist, and I wouldn't put that out as my base case. But I certainly do think the market is at relatively lofty levels now, and the valuations on our market are very stretched. So I think that in 2014, it's not unreasonable to expect that the market will probably track along sideways. I really don't think we should expect massive returns next year. And I would kind of go along more with what the Coronation guys were saying in that respect, rather than to say that we're looking for a 40% crash. I mean, I think a 10% correction in the market could come. That would probably be very healthy for our market. But that wouldn't change the fact that we're in a longish term bull market here.
Yeah. It would be very healthy for our portfolio too, because of course you have that put option on until December.
Yes.
So if there is a significant retracement, you stand to gain. And Garth, interesting that your trade this week is in fact a short.
Yeah.
So I suppose this kind of leads us into the trade on Kumba.
Yeah, well, that's it. So I am putting a short on Kumba this week. A lot of viewers might have noticed over the past 2 weeks or so, I've been a little bit skeptical and sort of almost avoiding pushing any trades. And it is because the market's at fairly lofty levels, and I've been a bit wary of forcing anything. But I do think this Kumba setup looks good for a short trade. And also, if we are of the view that the market has the potential to come off a little bit in the near term, then what you want to do, if you're looking to play the market from the short side, is you'd want to look for the weakest stocks in our market and look for opportunities to short those. Now, Kumba certainly fits that bill quite well. It has been very weak. It's been in a downtrend for some time now. And you can see, looking at the chart here, we've got the 50-day moving average, which is that blue line on the chart. The stock is trading underneath the 50-day moving average at the moment. And it's also, the moving average itself is actually pointing down, which to me is always a good indication of the medium-term trend. So that tells me that we've got medium-term weakness over here. In addition to that, we've got a bear flag situation forming on Kumba over there, which basically it's a retracement of that sharp move that we saw in the middle of October. The share has retraced in a rather controlled fashion, and we've now broken down through the bottom of that bear flag structure. Now that to me certainly points to a move to 400 Rand again, which was the prior low, and possibly I've got a further potential target of 380 Rand, and I'll show you why on the next chart. Also interesting to note here is the negative reverse divergence on the stochastic oscillator here. So that is where your stochastic is now more overbought on this rally than what it was on the previous rally, yet the share price is at a lower level. That is quite a negative setup. So given that, I put this trade on yesterday, and Traders Corner website subscribers will have received an alert to this trade. We sent out an alert to enter a short trade at 438 Rand yesterday, stop loss at 452 Rand, and we're looking for a target initially of 400 Rand, but also remember the possibility that we might go to 380.
That's quite a loose stop loss, isn't it?
Well, yes, it is a relatively loose stop loss, but if you look at our risk to reward ratio, it's still quite decent. You can see it on those, the red block there illustrates the risk, and the green block illustrates the potential reward if this trade gets to our target price. And the reward is 2.7 times bigger than the risk. So even with a slightly loose stop loss, that's fine. The thing that you've got to remember about Kumba is that it can be relatively volatile. It's one of the more volatile stocks in our market. So it does actually pay you to set your stops slightly looser and to take slightly smaller positions in this stock. Also interesting to note is that I put this short trade on with our sponsors, IG Markets, and I noticed that there was a lot of chatter on our website forum that at a number of other brokers, people were unable to short Kumba. And I know this is a problem that recurs from time to time, but useful that we were able to short it on the IG platform using a CFD.
Okay, so Garth, before taking us through the mechanics of it, you want to have a longer term look at the Kumba chart.
I want to quickly just show you why I think 380 is a possibility. Now this is a long-term chart of Kumba, and it goes back to 2007. If you have a look there, notice there's that big lateral area where you can see all the highs from 2008 and 2009 and 2010. That's at 380 Rand. Now the stock, I think quite clearly you can see here, it's been rolling over over the last year or two. And if you actually look at this, I mean, trading where it is now, you would almost argue that anybody that's bought this stock over the last 3 years is losing money or is close to losing money on it now. Which might surprise you to see that, but that's certainly what the chart's telling us. And I think given that, there's a potential for some sort of a flush out, and that could quite easily take us down to that 380 level. So I'm not ruling that out as a possibility.
I mean, certainly, before we went in air, we were talking about Kumba's highs of about 620 Rand. And so you, in your mind, well, certainly in my mind, I always think of Kumba as a strong stock, but actually looking at that chart, it's quite the opposite, unless, of course, you happen to pick it up in 2009.
Yes. Well, that's it. It was a strong stock for many years, but if you look over the last year and a half, it actually hasn't been. It's been a relatively weak stock.
All right, Gus, so in greater detail, tell us about this trade.
All right, so I've gone short at 438 Rand. I did the trade yesterday. The stop loss is 452 Rand. That means my risk per share is 14 Rand in this case. I'm risking 1.5% of our capital. So we've got 365,000. We had 365,000 at the time in capital. That's 5,475 Rand that I can risk, or what I can effectively be willing to lose if this trade goes wrong and hits our stop loss. I take it that the calculation that I always do is I divide the portfolio risk, divide it by the risk per share, and that gives me a figure of 391 shares. So I've rounded it off to 390 CFDs. The target that I'm looking at here is 400 Rand with the potential to maybe go down to 380. And my risk to reward, therefore, if I look at the first target of 400 Rand, my risk to reward ratio is 1 to 2.7 on this trade.
God, just the 1.5% that you're risking of the account. Normally we tend to risk 2%, so that is a normal trade for us. Is it slightly less because it is a short, which isn't your natural home as a trader? You're sort of naturally bullish and you generally tend to enter trades on the long side of things rather than shorting them. Is that one of the reasons?
It's one of the reasons, and also just that. One of the other things is that I battled to sell as many shares as I wanted to, actually, because it was you had to be very quick on the draw at 438 Rand yesterday, and I didn't manage to sell as much as I'd wanted to. I would have liked to have done a few more, but I got filled in that size. It worked out for me, so I thought, okay, I'm not going to chase the share lower now. I'll just leave it with what position I have, and it kind of worked out at about 1.5% of our capital. I could have gone up to 2% if the liquidity was available.
And what does it tell you if there isn't that much liquidity? Just that there isn't much liquidity, or can one read something more into that?
Well, in this case, it wasn't so much that there wasn't liquidity, but there wasn't enough liquidity at the price that I wanted to sell it at. And that was quite a good thing. I often find when a trade works immediately, that's generally a good trade, and it's generally a trade that you'll make a good profit on. And as much as I would have liked to have sold a few more short here, I couldn't. The liquidity didn't allow me to, and I then wasn't going to chase the share lower. I rather thought, well, I've got a decent sized position enough to keep us going here. Let's rather not chase the share lower.
Yeah. Okay. So what does the portfolio look like, given, and that leads us to a milestone of the year, I guess.
Well, that's it. Yeah. So we're up 50% for the year now. This is a new high for our portfolio for the year. We're sitting on 375,000 Rand. You'll remember that last year on the show we managed to end the year with a 53% profit. So obviously that's the milestone that I've got in my sights now. And we've got a couple of weeks left of the show. So I'll obviously have that in my sights to try and achieve. Yeah, lots of pressure. So you can see some of our recent trades. We've still got our option structure sitting in the background there, which will work for us if the market was to start falling further. We made some profits recently on Sibania and on the top 40. And then here's our Kumba trade. It's sitting at the moment with a mark-to-market profit of almost 9,800 Rand. And we're still in that trade, and we'll obviously revisit it when we come back to the show next week.
And as you say, that was nice, quick profit out of the blocks, and that generally tends to bode well. And just another point on Kumba, you've actually had a lot of articles about it recently, comments about the Sishen mine becoming a nightmare mine. Of course, it was a fantastic mine for it, but now they've had to go through all this waste stripping, so things may be a lot more difficult than they were a couple of years ago.
Yeah.
All right, Garth, so that's the portfolio. And next courses that are coming up?
Yeah, so there's courses, and then first of all I want to talk about my next face-to-face session. That's on the 28th of November. This is a live interactive session that people can come to. We'll do live analysis in the venue. Bring your questions, bring your debate topics and what have you. I'm going to have a theme for this one, which is 14 for 2014. I'm going to devise a list of 14 stocks that I think you want to own in 2014. Very difficult exercise that is proving to be, by the way. But anyway, if you're interested, go to my website, traderscorner.co.za, and you can register for it. And then in terms of courses, I've got a high probability trading course coming up in Durban on the 23rd of November. And anybody who'd like to attend that can email me, garth@traderscorner.co.za.
Maybe your 14 for 14 you could divide into 7 to short and 7 to go long of.
Maybe.
Or 14 to go short of.
Good idea.
Garth, we have to leave it there. Thanks as always for joining us on the show. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.